Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Icahn Enterprises, and let me tell you, it's not your average walk in the park. Think of it like this. We're about to dissect a roller coaster, and some parts might make you feel a little queasy. Speaking of feeling queasy, if you enjoy getting the unvarnished truth from financial documents, make sure you're subscribed and join our growing community on Discord for even more insights. Link in the description below. Icahn Enterprises just dropped a Form 8K, a kind of quick update they send to the Securities and Exchange Commission when something important happens. This one is all about updated presentation materials they're using for investors and the media. Basically, it's the company's attempt to tell its story in a way that makes them look good. But we're going to look past the polished presentation to see what's really going on. Skroiche taxed its Securities and Exchange Commission. First things first, this is a standard filing with the Securities and Exchange Commission, or SEC, on Form 8K. It's dated May 16, 2025, so it's fairly recent. Icahn Enterprises is run by Carl Icahn, known for his activist investing, meaning he buys big chunks of companies and then pushes for changes. The company itself is a limited partnership, which is a type of business structure. This particular filing is to share some presentation materials and exchange. Skroiche 20 itself is a limited partnership, which is a type of business structure. This particular filing is to share some presentation material. These presentations are to try to get new investors. This section is just the company telling us that they're sharing this information with everyone at the same time, so no one gets an unfair advantage. It's a rule called Regulation Fair Disclosure, or Regulation FD, ensuring that if they tell one investor something, they tell everyone. It also mentions that while they're sharing it, they're not necessarily responsible if someone uses it for investment decisions, unless specifically stated. This just points to the actual presentation materials which they've attached as an exhibit. That's where we'll find the meat of what they want investors to see. Now let's move to the good part, the presentation itself. It is titled Presentation Materials and it is Exhibit 99.1 to the Form 8K. This presentation is a slideshow and we are going to cover its major points to understand what is going on. The presentation is current as of May 16, 2025. The first few slides are your usual corporate fluff where they boast about being best in class. The company highlights that it has $6.1 billion in revenues for the year ending December 31, 2024. They also highlight their historical performance. They say that from December 31, 1987 to March 31, 28% compared to the S&P 500's 10.4% over the same period. Of course, past performance doesn't mean future success, but it's what they are hanging their hat on. The slides then talk about the different areas that the company works in. These are investment management, energy, automotive, food packaging, real estate, home fashion, and pharma. The presentation then talks about he wants a 1980 automotive, OVAD, Ford patching, real estate, home fashion, and pharma. The presentation then talks about each area in more details. First, let's look at investment management. Icahn Enterprises manages investment funds. From December 31, 1998 to March 31, 2000, annualized return of 13.6%. The S&P 500 returned 7.2%, S&P 500 returned 7.8% over the same period. That looks good, but past returns are never a guarantee. It is important to remember that Mr. Icahn himself is heavily involved in the investment decisions. Now, about their energy business. They're involved in petroleum refining, renewable fuels, and other energy-related activities. They own a controlling interest in CVR Energy. CVR Energy had revenues of $7.7 billion in 2024. The presentation highlights that the energy business is looking into ways to make renewable diesel fuel and sustainable aviation fuel. It's all about trying to look green. However, they're still very much in the petroleum business. They are also talking about carbon capture. Carbon capture is like putting a filter on a factory to capture carbon dioxide. Next, let's talk automotive. Icahn Enterprises controls IEP Auto Parts. IEP Auto Parts. IEP Auto Parts owns Auto Plus and Pet Boys. The company says that the auto parts industry is worth $350 billion. They're trying to take advantage of the fact that people are keeping their cars longer, which means they need more repairs and parts. The slide says that the company will benefit from the aging car fleet. In 2024, IEP Auto Parts had revenues of $2.4 billion. Now, let's check out food packaging. They own Viscars, which makes packaging for meat and poultry. The company says that the food packaging market is $37 billion. The presentation says Viscars has a global manufacturing footprint, which is just corporate talk, for they have factories all over the world. In 2024, Viscars had revenues of $0.5 billion. They're also in real estate. Icahn Enterprises owns various properties, including commercial, residential, and resort properties. They are trying to develop a big resort in Las Vegas called the Fontainebleau Las Vegas. This is not the first time that this project has been worked on. In fact, the project started almost 20 years ago, but had several stops and starts. The resort finally opened in December 2023. The company is hoping to make money from the Las Vegas property. Let's look at home fashion. They own West Point Home, which makes bedding and bath products. West Point Home focuses on making products for different retailers. In 2024, West Point Home had revenues of $8.8 billion. Finally, there's pharma. Icahn Enterprises has an investment in Vivus, a pharmaceutical company. Vivus has a drug called Qsenia, which is used to help people lose weight. The company says that obesity is a big problem, so there's a big market for weight loss drugs. One thing that is interesting is that the presentation addresses the discount to net asset value. The presentation says that Icahn Enterprises trades at a discount to the value of its assets. It claims that this discount is unwarranted and that the company is undervalued. They say that the discount to NAV is approximately 60%. This means that the market values the company at 60% less than the stated value of their assets. It claims that this discount to NAV is approximately 60%. This means that the market values the company at 60% less than the stated value of their assets. The presentation ends with a summary of why investors should invest in Icahn Enterprises. They highlight the company's past performance, diverse businesses, and undervalued stock. So what's the real story here? Well, Icahn Enterprises is trying to convince investors that it's a good deal. They're pointing to past successes and highlighting the potential in their different businesses. But it's important to remember that investing always involves risk. The company's performance depends heavily on Carl Icahn's investment decisions, and that can be unpredictable. The company's discount to its net asset value is also worth noting. Usually a discount might suggest that the market is worried about something. Are they seeing risks that the company isn't addressing? Is the company being overly optimistic in their valuation? This could be a red flag. On the other hand, the fact that the company is addressing this discount in the presentation is interesting. It shows they're aware of the problem and trying to convince investors that it's not a real issue. Now, looking at these materials, it's clear Icahn Enterprises has its strengths. It's involved in many different industries which can help cushion it if one area struggles. The company also has a long history with some successful investments under its belt, but there are risks. The company's performance is closely tied to Carl Icahn's decisions, and some of its businesses could suffer. The Tipper Icahn's decisions and some of its businesses like the Las Vegas resort are dependent on the economy. If consumer spending slows down, these businesses could suffer. Overall, Icahn Enterprises is a complicated company. It has potential, but it also has risks. Investors need to weigh the opportunities against the potential downsides before making a decision. A reasonable target price range is hard to determine without a deep dive into each of its holdings. Alright, that's our breakdown of Icahn Enterprises' latest presentation. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.